Thank you for staying with Channel 1. You are watching Business Insight. Now, the rollout of the COVID-19 vaccine is likely to reduce the negative impact of the COVID-19 containment measures announced last week. This is according to the National Bank of Kenya's head of Treasury, Forex and Sales, Robert Githiri, who says the vaccine has given hope to businesses and investors that COVID-19 is likely to be contained soon. Our reporter Regina Manyara talked to Githiri about the likely impact of COVID-19 pandemic on the economy. Take a look.
Good evening, you're watching Business Insights and I'm Regina Manyara. So what are the economic projections after this particular new COVID-19 measures? To take us through this conversation is none other than Robert Githiri, who is the head of Treasury, Foreign Currency Trading and Sales at the National Bank of Kenya. From where you sit, what has been the impact of that particular address?
The first thing I'd like to say is I don't envy the position that the president is in. In a way, whether he put down the lockdown measures or he did, he was doomed if he didn't, and he was doomed if he did. So he made a choice. It was a difficult choice. I'm sure he's very aware of what the economy is going through. And we as individual citizens, not even as bankers, understand the pain that the country is going through. And so it wasn't an easy decision for the president to make. So I really sympathize with Kenyans and also with the leadership. So in terms of outlook, we are of the opinion that given that it's 1 year since the pandemic was declared and things don't seem to be turning around in terms of bringing this pandemic to a close, I think the one thing in terms of outlook that is clear is that uncertainty will be with us for the foreseeable future. I know that foreseeable future was probably end of last year. There was a lot of hope with the introduction of the vaccines that this would come in and bring the pandemic to a close and we'll be able to go back to business, back to normal life. However, that is not the case. We now have the third wave. We're having various variants of the virus. We are seeing with the third wave an increase in infections, increase in hospitalizations, as well as, unfortunately, deaths. And as we've been hearing across social media, previously the pandemic was out there, but now we are hearing certain names being mentioned, public figures, and that message is hitting home like it hasn't before. So we are concerned. The economic outlook is not good. I think the MPC, the Monetary Policy Committee of the Central Bank, met yesterday, and in their outlook they also indicated that the economy and business conditions are highly uncertain. So we maintain that view in line with the central bank. But just to give our customers that additional hope is that we are saying we are also cautiously optimistic because we are seeing some green shoots beginning to appear in certain sectors of the economy. But broadly, there are
there's
concerns.
A lot of uncertainty.
There is uncertainty and there is concern, and it is it's based on facts, so we can't run away from it. Whilst we are cautious, we are also optimistic. Yes.
Now let's address those concerns on, assessment as a banker. Which areas, or rather, which sectors are, receiving the short end of the stick? Okay.
Again, following from the restriction in movements, the close down in the 5 counties. Number one is the entertainment industry, hotels. Tourism, of course, has been on the down low given international travel. We are not seeing tourism coming back very soon. Even with the vaccinations being rolled out, there are still concerns that tourism will not pick up as quickly as anticipated. So that's number one. Number two, in terms of the negative hit, would be the micro, small and medium enterprises. That sector, based on just the capital adequacy that they have, are not able to go for a long duration of time without sales. So as a result of the lockdowns, these cottage industries and kind of family businesses, individual run businesses, I think will also take a massive hit, given the fact that they don't have a lot of depth in terms of the capital outlay that individuals are able to put up as they start a business. So startups, the informal businesses, the import-export businesses that we see in River Road, Kenyans going out to China, to Hong Kong, to Turkey to bring wares to sell back at home. I think those industries will also take an inordinate shock from the measures that have been announced. So those two sectors, I think, would be
was hit.
Yeah.
Okay. What interventions then are commercial banks ready to roll out in light of this new development?
Now, I'm not in a position to be able to state exactly what the central bank will do, but the central bank has been at the fore. And the governor has been very clear in terms of his commitment to ensure that the economy is on sound footing, that we are seeing sufficient liquidity in the market, that there is support and there's a transmission mechanism where banks are able to on-lend the funds that they have to the productive sectors of the economy. So there's that commitment, and that commitment continues to be there. However, just because the emergency measures that were declared by the central bank last year have expired does not mean that the commercial banks, especially National Bank, does not mean that we are not willing to listen to our customers. We're operating in this environment. We know exactly what our customers are going through. We appreciate the economic difficulties and the adverse nature of this pandemic. So we are willing to listen. Our relationship with our customers is not a short-term partnership. It's something we look at as a long-term partnership where we endeavor to help our customers to succeed, and in that way, we as National Bank will also succeed. So I think the message that we want to send out clearly is that we are open and we are willing to listen. Just because the emergency measures have expired doesn't mean we will not listen.
Foreign currency trading. How are we performing, and how then has that reflected onto us as Kenyans?
All right, fine. Let me take the issue of inflation first. There will be a pickup in inflation in the short term, but over the long run, and which is the main concern, I think, for central bank and for economists and for bankers as ourselves, in the long run, that inflation will come down. By the end of the year, we were trading at around 110, which is where we currently are. So again, we need to look at this vis-a-vis other emerging market currencies, look at our brothers and sisters, Tanzania, Uganda, Rwanda, Burundi, and we're seeing the currencies move in a similar direction. So this is not something that's peculiar to Kenya in terms of the depreciation. It's something that we've seen globally. We've seen an exit towards the end of last year as a result of the pandemic. Equities were down, so foreign investors pulling out of their portfolios. So there was an outflow as these investors bought dollars, and that probably informs the reason why we did see that pickup in the rate, the depreciation in the Kenya shilling. And the good news now is that we have seen that stability from last year into this year, and the markets are very stable. When we look at the demand and supply side, both appear evenly matched, and our outlook is very positive for the Kenya shilling going forward. We are positive that we will see stability, which is something that is very key on the FX side for businesses.
Now let's look at the commodity price index. What is your take on that, on a current trajectory?
So on commodities, I think the key commodity for us would be refined oil, which constitutes about 20-25% of our import bill. So we no longer import crude. All that comes through is the refined product, what they call the white product. So that continues to take about 20-25% of total imports. In terms of the way the industry is organized through the open tender system, that is absolutely predictable in terms of what the demand for dollars is going to be in the market, working with oil marketing companies to be able to see what their demand for the month is as they place their orders through the OTS. We're able to foretell very clearly, and we're able to meet that demand as it comes through. So in terms of the commodity index and commodity prices getting out of hand, we continue to monitor the price of crude oil on a daily basis just to ensure that we're able to advise our oil marketing companies what kind of positions or hedges they need to take out to be able to meet their future demand and supply.
Now, as we look towards recovery, there's been a lot of talk, especially as you mentioned, or rather alluded to earlier in the beginning of this conversation. We had talk, with the rollout of the vaccine, the country working towards recovery.
Yeah.
Riding the third wave, from where you sit, should we adjust our, recovery timelines then?
That's a good question. In this way, we have all, me included, been expecting this pandemic to come to an end. It's March. It's 1 year since it was declared a pandemic. I think the logic here dictates that we begin to accept that this is probably the new normal, that this virus is not going away. I think the more we insist that it's going away, I think that we're not able to deal with the things that we need to do.
The realities.
Yeah, with the reality of life. The fact of the matter is it's 12 months down the road. This is the third variant. Who knows whether there's going to be a 10th variant? I'm not here to... Did
you say 10th variant?
I'm not here to spread doom and gloom. But I'm just saying that probably this is the new way of life. The good news is that we have vaccines. The government has, with the United Nations, African Union, been able to organize, like 1 million doses of the vaccine. The vaccine is available. We are seeing Kenyans turning out in large numbers yesterday on the news, following the leadership also setting the trend and the tone. So we're seeing people coming out, going for the vaccinations. We're also seeing the African Union negotiating with Johnson & Johnson, and I think they've negotiated for 400 million vaccine doses, which should be expected third quarter. It's a bit far out, but again, we just need to be cognizant of the fact that there's a lot of demand for this vaccine right now. So there is some good news. There is some light at the end of the tunnel. It's not all doom and gloom. So we are hopeful, but I think, like with everything, the first step towards a recovery is to accept the situation that we are in. Acceptance and adjustment. And then once the acceptance is there, then we'll be able to move on. Yes.
Now, you've mentioned about, the reactions. What would you say have been the reactions to the rollout of the vaccine? Looking at it at a macro point of view, have you seen markets reacting to this?
Yes. I think if you look at it globally, I think starting off with the UK, which has been picked up as a model in terms of how they have rolled out the vaccine, as opposed to the European Union, where there was a bit of delay in terms of ordering. So the UK was very fast to the game. They placed their orders with all the major pharmaceutical companies, and there was a contractual obligation for those companies to deliver to the UK. So as a result of that, we don't have sufficient vaccines in the European Union where they're being manufactured. So there's been that push and pull between the UK and the EU. But the good news is that the UK has set the trend for anybody who wants to follow. The rollout has been very successful, and as a result of that, hospitalizations, severe illness and deaths have decreased drastically. They've also had a severe lockdown. I mean, what we're calling a lockdown here in Kenya is nowhere near to the lockdown that we've seen in the UK. So the UK lockdown has been extreme, but it has paid off. The economy is much bigger and more resilient than ours, so we really can't do a like-for-like comparison.
Now, let's look at the Nairobi bourse, and as far as trading is concerned, in light of the vaccine roll. Have there been major changes, or rather reactions, to the rollout of the vaccine yet?
I would say marginal. There has been a marginal improvement, and that is expected, given the lows that we are coming from. We have seen, like I mentioned earlier, the dip last year as foreign investors sold their portfolios and moved away to more stable markets and safer asset classes like gold, which hit $2,000 an ounce. But now there's a slight recovery coming through. We are seeing a bit of activity beginning to pick up. The major indices are also registering, marginal growth, which is good because it's consistent marginal growth on a month-to-month basis, and that for the country, the equity market usually is a pointer in terms of recovery. So every time that moves up, it's just sending signals to us in the markets that we are on a recovery path. However, that could turn around at any time. Like I said, the markets are absolutely uncertain.
Very uncertain.
Yeah.
Now, let's look at lessons that you have learned over the 1 year in as far as, industries are concerned. You mentioned shoots, or rather lessons, positives of COVID-19.
Yeah.
Go ahead.
So where have we seen some positive reaction coming out as a result of this? Because with every negative,
there has to be an equal opposite.
There's always, like they say,
yes.
A silver lining. So for us, I think the biggest and the most resilient sector has been agriculture. And agriculture, again, is big. I think constitutes about 20-25% of the Kenyan GDP. So agriculture has been resilient. We have been fortunate enough to have some good weather throughout the last 1 year during the pandemic. So in terms of food supply, that has been consistent. Food prices have been stable across the country. So food inflation has not kicked in. Fuel inflation has because of what has happened in the international markets. But food has been available. And on top of that, when we look at some of our key exports like tea, I think, again, referring to the MPC data that came out yesterday, we saw tea exports were up about 8%. Horticulture exports up about 3% month on month between Jan and Feb. So there's a good picture coming out from the agricultural sector, and we have no reason to doubt that that will continue. So that's a major positive. The second bit is construction, and that is evident for anybody to see. Just take a drive around Nairobi, and there's construction upon construction. And I keep asking my colleagues in construction, this industry seems to be
blooming,
aloof to the pandemic. They don't seem to be aware that the pandemic is
I think maybe it has to do with it being a long-term investment. It's not something that you just get into. What would be the key deviations of this particular budget in comparison to the 2020-2021 budget as we come to a close?
I don't see a major deviation from previous budgets. We, as a country, have undertaken massive projects, and we need to continue to finance those. So that is a reality on the ground. The issue for us as NBK Treasury is that, and the key thing that we're looking at is always, we're looking at the deficit. So government always, with a budget, is setting out ways to collect revenue and putting in place an expenditure program in terms of how they're going to do that. So normally you would have the expenditure always outruns the revenue. We have seen challenges in terms of revenue collection, which is expected given the adverse economic conditions that have been caused by the pandemic. So KRA probably not able to deliver on the set targets given that situation. So we anticipate that the projected budget deficit is going to be larger than expected. If you look at the budget for last year, the deficit was around 494 billion shillings. The government is on track to meet that borrowing program for last year, which is good news. However, this year, we could see that budget deficit probably approach the 10% level because we have commitments as a country that we have already gotten into. And we need to ensure that we continue to finance those projects to fruition, get them up and running, and so that the economy can begin to bear the fruits of some of these mega projects that the government has undertaken.
Very well said. August this evening has been the head of Treasury trading, or rather that what you call head of Treasury Forex currency trading and sales at the National Bank. That is none other than Robert Githiri there. The agriculture sector might just be the windfall that Kenya's economy is going to rely on post-recovery and even as we continue riding the third wave. I'm Regina Manyara. You've been watching Business Insights.